This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call. You're watching us live from the CNBC-TV18 Motilal Oswal studios right here in Mumbai. I'm Sonia Shenoy, and joining me this morning are Prashant Nair and Nigel D'Souza. Folks, it's not looking that great for the market, but you know what? The Nifty has been so resilient amidst all of these weak cues. So let's see how today shapes up.
Absolutely. I mean, actually, I thought yesterday, while we were signing off for the day, that maybe yields and dollar will start to, after the massive move they've had, they'll start to behave a little bit, come off a little bit. Well, no such luck.
I think on on more positive terms, this morning when I woke up, I make a header, right? That cues to watch for Tuesday. I was like, it's already Wednesday. Good times, guys.
Just 2 more days. No, 3 more days.
3 more days. Today and then we get through the other. But I am feeling quite fresh because it's just coming out of a long weekend. So I just thought on a positive note. But a lot of
Nigel,
questions.
you are feeling fresh because you are coming out of a long weekend and a nice little break.
Lovely.
All right, well, let's just quickly tell you what you need to know as we begin today's session. We're all smiling, we're all happy, and no reason why we should not, although the markets are lower. I mean, I'm talking about the US markets because that's where we want to start this sort of presentation with. So, the massive rise in US yields and dollar continues, and that is basically what is inflicting damage. If you look at the US 10-year yields, they're up 100 basis points in the last 2 months. This is the overnight change across the US curve. The 5-year went up 9 basis points. The 10-year went up 12 basis points. The 30-year US yield went up 13 basis points. It hit 4.95. I mean, incredible, right? I mean, the 30-year, you're now closer to almost 5% there. So these are very large moves, and they are especially troublesome because they come on the top of already very large moves that we've seen over the last 2 months, as I explained. I mean, actually, for the 10-year, it's not 100 basis points now. Adding yesterday's change, it's about 110 basis points in the last 2 months flat, right? So troublesome. The dollar index that stays above the 107 level, so 107.07 is where the dollar index is at. And equities, as a result, were under pressure. So look at the S&P 500, down about 1.4%. The Nasdaq was down about nearly 2%. The Russell 2000, which is the small cap index, down another near 2%. So these are large cuts that we are looking at for on the day. Now, on the S&P 500 is almost at its 200-day moving average. That's essentially the Lakshman Rekha, right? I mean, it's a longer-term, slower-moving average. And that stands at about 42.22. We left off at about 42.30 or so. So very close to it. The WIX, which is the CBOE WIX, which is the fear gauge, that has topped 20 for the first time since May. And that additionally is also putting pressure. There was data which was the underlay for all of this, and data was strong in the US. The JOLTS number beat expectations. On top of it, you also had Fed speak, actually 2 Fed speakers specifically, who kind of reinforced this entire theme that interest rates in the US need to stay higher for longer. So, Fed's Mester, he endorsed a hike in November. And there was another gentleman who's also a voting member, Bostic, who repeated the preference that rates need to stay higher. Now, of course, that's essentially been the problem, and more the consensus from calling for a soft landing, from saying no landing. I mean, it's kind of weird away to the fact that, and kind of facing the fact that maybe we need to be prepared for, rates to stay high and any cuts to be back-ended sometime in 2024 and smaller. So that's where the consensus has moved. Oil prices, which saw a 5% sell-off, and we were talking about that yesterday morning, same time, they moved up a little bit. Nothing very large, but 91 or so, and they still remain about $7 from their recent highs. Where does all of this leave us? It leaves us in a tricky kind of a spot once again. Yesterday we were saying that don't do anything right at the open, and maybe staying on the sidelines is the best thing, and that perhaps is true. You do get these intermittent bounces, but like what you saw yesterday, perhaps they get sold into. So the Nifty yesterday closed below the 40-day exponential moving average. Once again, it's not being able to clear that level in a convincing way. There is no clear evidence of a breakdown, right? I mean, we are still above 19,500. So that's, I think, the good news. But I think one needs to stay open to the idea that maybe a little bit more in terms of downside is coming, maybe in a slow, slightly lagged fashion, but it's possible it's coming. So on the downside, there's a possibility of a test of the daily low and Bollinger Band, which stands at about 19,362. That's a little away from where we left off yesterday, but keep that number in your mind. On the Bank Nifty, we've once again closed around the 78% retracement of the August to September rally. Day before yesterday, it looked like it had cleared that, but no luck. We left off just within a couple of points off that. On the Bank Nifty, the daily lower Bollinger Band is 43,808. Again, these are sort of near-term levels that we are looking at. This is, 2% away on the Bank Nifty, but keep that number in your mind. And on the way up, I think for both the Nifty and the Bank Nifty, there are these retracement levels, but there's also the 20-day, which stands at the 44,803 level, and the 40-day exponential moving average, which stands at 44,032. These are resistance levels. It'll be fantastic by the end of day today, by 3:30, if, somehow by a miracle, and, the market here has been nothing short but miraculous, is able to defend or close around the 19,500 level. Will we get that? It's a tough ask, but we will see. The open itself is indicating a 140-odd point lower start. Sonia.
Absolutely. It's going to look pretty ugly this morning, right? At least that's what the GIFT Nifty is suggesting. But give and take everything, it's been a pretty resilient market. So yes, it's a bear attack that we have on our hand, but the Nifty has been so resilient in this market, and I think that's something that will stay with me. If you look at the trajectory so far, we've lost, about 3%, right, from the September 15th high of 20,192. So it's not been such a big fall up until now, but let's see what the next couple of days throw up. There are a lot of cues stacked against the bulls. So whether it's the US 10-year Treasury yield, which is at a 16-year high, there was a big slide in the Dow overnight. The Dow, in fact, is now negative for 2023, so it's wiped out all of its gains that it's seen through the course of this calendar year. And FIIs, the selling has been pretty sharp as well. So FIIs sold over 2,000 crores in the cash markets yesterday, and that's been selling for 9 straight days. But I'll tell you why I'm still a little hopeful about this market is because the fundamentals, the macros are looking good here in India. Just one case in point, right? A couple of these companies came out with their numbers and their quarterly updates. And I think one of the stocks in focus today, and perhaps the stock of the day, could be Bajaj Finance. A very strong business update is what the company has come out with. There is fundraising tomorrow as well. So all of that put together will perhaps, give the market some hope that things are not so bad. Just look at the numbers. New loans booked in Q2 grew by 26%. The AUM grew by 33%, almost at about 2.9 lakh crores as of 30th September. And also some of the other smaller, components in the BFSI space have also done well, whether it's Bank of Maharashtra, CSB Bank, M&M Finance. We'll talk about them in greater detail later. But M&M Finance, for example, reported a disbursement growth of over 13%. So yes, global cues are weak. Yes, there is selling pressure from FIIs. But in our own markets, the fundamentals are not too bad. And hence, the Nifty has been resilient around this 19,000 mark. But let's see how it goes today.
Well, that's right. Sonia, globally, we're standing out. But there are too many negatives globally to ignore. So you need to put them on the table as well. You need to take note of the higher yields, the rise in crude oil prices, the stronger dollar index as well. The broader markets, that's really been the theme that has played out. And I think there are still many, many stocks out there that could still outperform the market by a great deal, but you need to be careful on suspect names. But that's been the theme. Even yesterday, you had the mid-cap and the small-cap indices. They did much better than what the Nifty did itself. For today, though, the Nifty Bank holds the key. Why is that? We've got a lot of updates that have come in there from the banking as well as the financial names. So that's point number one. Point number two is the IT index could be a little bit under the weather because the NASDAQ was under some pressure. So the Nifty banking index itself will have to hold one end up. And point number three is today's expiry for the Nifty Bank. So I'll be watching that index very, very closely. The Nifty banking index holds the key for today if the bulls need to defend the lower levels. What did the FIs do yesterday? Well, you looked at the premium on the Nifty and it had come down quite a bit. That told you there were shorts in the system. And the FIs, they added close to 20,000 short contracts. And in a matter of few days, the short positioning has gone up from around 25,000 short contracts all the way to 85,000 short contracts. If you just look at the last few days, you'll see the way the short positioning has gone up, the net short positioning from the FIs. What about the options data? Well, yesterday, the 19,600 call, 19,550 call, both of them were fairly active. At the start of the day, the premium in both those two strikes were at around 100 and around 150 rupees, which tells you the bears believe they have got this 19,700 mark for the taking. They don't see the Nifty moving above that, and that's why there is such aggressive writing out there. So that becomes a bit of a resistance zone on the upside. You also have the 20 and the 50 DMA that are in that vicinity. On the downside, 19,450, we're going to start below that level. But on a closing basis, the bulls will want to defend that because the highest open interest on the put side is at around that 19,500 put. The premium has come down to around 30 rupees approximately. So that's going to be the important strike that you're tracking out there. The Nifty Bank, since its expiry, we need to take note of that as well. 44,400 call. Well, that was fairly active yesterday. The premium was around 350 rupees odd. So 44,800, that becomes a very, very crucial resistance zone. But on the downside, you'll want the recent lows at around 44,000 to hold out. So all eyes on the Nifty Bank. It plays out expiry today. If there's something that can bat for the bulls, it's going to be the Nifty Bank because the Nifty is likely to pull back 130 points.
Okay, well, the RBI's MPC meeting is also scheduled, so it kicks off later today. So we'll, of course, get you a lot of macro opinion coming through on the market. So let's see. Oil prices have rebounded from their 3-week lows as well. So that's another internal to track. Brent continues to be around that $90 a barrel mark. More on that later. But in the meantime, we have a lot of opinion coming in for you this morning. And one of the best voices in the business, Rhythm Desai of Morgan Stanley, says that the trade that seems almost certain in the current quarter is higher volatility. The heavy calendar is packed with events with binary outcomes in a market that is less volatile than it has ever been. The fundamental story is intact. India remains one of their top picks in the emerging market space. In terms of sector positioning, Morgan Stanley is overweight on financials, technology, consumer discretionaries and industrials and underweight on other sectors. Rhythm adds the macro trade is approaching its peak and they may soon be back to stock picking as the more effective strategy.
Okay, let's get you some money market views now. So we've got Kunal Sudani weighing in on the rupee. He says that rising U.S. Treasury yields and faltering global growth outlook, supply-constrained rising oil prices and a short-term government funding stopgap for the U.S. are all sending investors into safe haven, which is the U.S. dollar. Eyes now remain on U.S. non-farm payrolls data. Dollar index may find resistance at the 108.1 levels. For the dollar INR, 83.05 to the dollar acts as support, while 83.3 to the dollar is the immediate resistance. And that is followed by the next level, which is 83.5.
All right, and on the bonds, Neeraj Gambhir of Axis Bank says the 10-year benchmarks traded in the range of 7.15 to 7.24%. Bond yields moved higher on weak global cues and weaker auction demand in the longer duration and increased supply and operational challenges related to the quarter-end closing and shifting of the holiday. He expects the 10-year benchmark to trade in a range of 7.15 to 7.25% ahead of the MPC this week.
Well, there's a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. But for the time being, let's run you through the list. Bajaj Finance, IDFC First Bank, Avenue Supermarts, Nestle, Bank of Maharashtra, Yes Bank, APL Apollo, and Titagarh Rail Systems. They are expected to open up in the green, while on the flip side, you have Vedanta and Polyplex that could be reacting to negative news flow.
Okay, well, Dean Kim is now joining us. He's head of global research product at William O'Neill and Company. Dean, good to have you with us here. Thank you for your time. Just sort of weigh in on all that has been happening, and what we've outlined. The big story is the massive rise, the continued rise in yields on the dollar. And I don't know if you've gone back and looked at whether after such a sharp rise in a short time span, yields especially retrace. At least that's what anecdotally I remember. Your thoughts? Are we close to a bit of a top here?
Well, the problem is the 10-year bond yield currently sitting at 4.8% or thereabouts. But the next resistance is actually 5.25%. And so, the bond yield can quickly accelerate to 5.25. And given the fact that the Fed is poised to raise on another 25 basis points next month, we think it's more of a probability that we will get to 5.25 before we see any kind of retracement. Of course, August job opening numbers today, more than expected, doesn't help. But we're hoping to see Thursday and Friday where initial jobless claims and payroll numbers that may actually come in cooler, and that may settle the bond market. But from a technical perspective, I think the yield has a fair chance of getting to 5.25. Now, going forward, the inflation is coming down, but it's not coming down fast enough. And so when people talk about rates staying higher for longer, that's probably more of a scenario than not. So, in terms of retracement for the bond yields, we'll see what happens Thursday and Friday, but it may stay up longer than we'd like.
Okay, Dean, hi, good morning, and thank you for joining us on the show. I wanted your thoughts on the chart of the Dow, because, we've seen significant pressure there. I mean, it's not as bad, perhaps, as what we've seen in the past, but in the last 1 month, the Dow is down almost about 5%, right? And now hanging at that 33,000 level, it's become negative for the year as well. Do you see more pressure in the near term? If yes, what are the levels that you're watching?
Yeah, I mean, the Dow is very troubling because it's, made up with very large companies, particularly, financial companies. Now there's a huge headwind where the market is pricing in for more defaults in commercial real estate sector. And so, in fact, the defaults are going up now. That is not great news for large cap banks. And when I look at the S&P 500, it's poised to sort of retrace down to the 200-day moving average. So in fact, that's the next level of support for S&P. I think we're going to have to go through some period of pain before we see a turnaround. But the commercial real estate worries, that's beginning to resurface.
Hi, Dean. Good morning. S&P 500 can drift down to the 200-day MA. What about the Nifty? How's it looking? I mean, how deep can we go, if at all we do need to correct?
Yeah, I think for, the Indian market, what I've noticed is this bit of a pullback. It was on low volume. So I continue to see Indian market as being very resilient. The next support on the sensex would be the rising 100-day moving average. Which is only 1% away. There is a bit of a price support, 3% away. But I'm glad to see the volume is actually not that big in terms of this, sort of consolidation. And I think if you do see a bounce off the 100-day moving average, that's a great sign. However, if the sensex starts to break down below the 100-day moving average, that would be your signal to start trimming positions.
Okay, and what about crude oil prices? That's a worry here in India. When it was at around 70, everyone said it's going to top out at 80. Then we saw 90. And a few days ago, we saw $97 as well. Do you think that the peak is done in the near term and we could retrace from here? Because you've seen that numerous times in the last 12 months.
Yeah, right now oil is sitting at a particularly, precarious situation because the next resistance is actually $95 if I look at, sweet crude currently sitting at 89. So that's a big jump. And so there's a gap between current point and $95. So unfortunately, we may see that, given the fact that the OPEC countries continue to cut back on production. So that is going to be a bit of a sticking point in global markets, and that doesn't help with U.S. inflation either. But let's see what happens. I think oil price it is sort of in a dire situation at the moment because the next resistance is at 95.
All right, we'll leave it at that. Thanks a lot for joining in, Dean. Appreciate your thoughts. Not looking like it's going to be a good start this morning. The GIFT Nifty suggesting an over 125-point cut. But we'll take it from there. Let's take a short break. Many stocks in focus, so don't go anywhere. We'll be back in a bit. What happened? Welcome back to Bazaar Morning Call. Well, the cues are stacked against the bulls, but this morning there is some data that has come through which is positive, which could perhaps provide some respite. Our research team is standing by to give you that list. First up, one of the top stocks in focus today could be Bajaj Finance. Abhishek is here to tell us how the business updates look this time around. Abhishek, over to you.
Yeah, the business update did look like a mixed bag, but more on the positive side. So the good part is that the AUM growth is robust at 32.9% YOY and about 7.4% quarter-on-quarter. So in terms of YOY growth, it's perhaps one of the best in last 15 quarters. Deposit momentum continues to remain strong, up about 39% YOY and close to 10% quarter-on-quarter. Customer acquisition has remained steady at around 4.5% on a sequential basis. So this time around, it's at 21.7% YOY and about 4.9% quarter-on-quarter. Calculation shows that the AUM growth is not driven by ticket size, as average ticket size has grown by just 9.2% YOY and about 2.45% on a sequential basis. What's not good in the update is that the new loans disbursed, that's down about 14.2% quarter-on-quarter. So if you take a look in Q2 versus Q1 over the last 6 years, this is perhaps the weakest decline that you are seeing over here. Liquidity in the balance sheet, that's down by about 10.2% quarter-on-quarter. There could be some pressure on the net interest margin. Cross-sell rate, that is at 9-quarter low of 6.5%. Back to you.
Okay, all right, Abhishek, thanks a lot for that. But let's stick with the banking names itself. And Sudarshan had given us a heads up yesterday. There was likely to be some fundraising from IDFC First Bank. Sudarshan, you're on a roll. Another one in your kitty. Tell us more. The news is confirmed.
Good morning. Yes, IDFC First Bank will be in focus. Our news break of yesterday is confirmed. The bank has launched QIP to raise up to rupees 3,000 crore. The term sheet that CNBC-TV18 has gotten access to of total rupees 3,000 crore. The base size of the QIP is rupees 2,000 crore and the green shoe option is of rupees 1,000 crore. Indicative price for the QIP is seen somewhere around 90 rupees per share, which is 4% discount to yesterday's closing price. Remember, last time that IDFC First Bank had done fundraising was way back in 2020, and that was a QIP of rupees 3,000 crore at a price of rupees 57 per share. Now, in the last 2 to 3 years, both IDFC and IDFC First Bank have had a major run. Both the stocks just in 2023 are up more than 50% each. Also, recently, GQG's Rajiv Jain invested in IDFC First Bank, bought a little more than 5 crore shares at a price of rupees 94.50 per share.
Okay, all right, Sudarshan, thanks a lot for that. We'll keep an eye on that stock, and congratulations yet again on that big exclusive. Well, let's focus on Vedanta. Vedanta, you're expecting the stock to maybe cool off a little bit. In the last 2 sessions, the stock is up more than 10%. And the operational update is par for the course. Normally it doesn't react to that, but you have the dollar index that continues to remain strong with weighs on base metal. So let's run you through the update first. They've given the production numbers. The aluminium business out there's a bit of a growth, production growth of close to around 2%. On the zinc business, the integrated saleable metal, which includes zinc as well as lead, out there's a bit of a degrowth of close to around 2%. And silver, which is supposed to be the big driver from here on, out there you have a degrowth of close to around 7%, which is a little bit subdued. The zinc international business as well, the total mined metal is down by close to 10%. While the oil and gas business, well, it's not really able to ramp up out here, though they'll enjoy the benefits of higher crude prices. So that one as well, you're seeing a degrowth of close to around 5%. The power sales, that's the lone positive out there. And we know power demand has been very, very strong, double-digit growth out there. We're expecting the stock to open up a little bit subdued because it's run up, the dollar index is strong, and the update is not too great.
Okay, update not too great. Let's find out how Avenue Supermart's business update looked. There's also Nestle in focus. Mangalam is here to give us the latest on that. Mangalam, good morning.
Good morning. So for Avenue Supermart, it's a decent update. 18.5% revenue growth is what the company has reported on a standalone basis. Of course, this does not take into account DMart Ready. So 12,308 crores is what they've done. Quarter on quarter, this is a growth of 6.2%. Importantly, they've added about 9 stores this quarter. So the total store strength for the company stands at 336. What's crucial to check is that, year on year, the store growth has been around 11.2% and the revenue growth has been around 18.5%. So that's telling you that there has been a same-store sales growth, a positive same-store sales growth, and which is higher than the previous quarter. So that should be a positive. However, we have to track how the performance of non-FMCG essentials have done because those are higher gross margin businesses. The stock has underperformed over the last 1 year or so and has been down around 18% from its 52-week high. So see some bit of relief. But a big move is expected on Nestle. Why do I say that? Because the stock price is close to 22,000 odd rupees, and the board has said they will consider stock split on October 19th when they meet for their results as well. The stock is trading at a face value of rupees 10, so all options are open for a stock split. For a stock price that trades in 5 digits, a stock split is often good news.
All right, thanks a lot for that. Well, let's move on. Abhishek is having a couple of more business updates that he's looking at. Bank of Maharashtra and Yes Bank. Abhishek, over to you.
Well, to begin with, Bank of Maharashtra, absolutely brilliant numbers in current scenario. Take a look, deposits up more than 22% YOY and a decline of 2% sequentially. The CASA is up 10% YOY and a decline of 2.6% quarter-on-quarter. CASA ratio, one of the best in the industry at about 50.7%, which compares to about 51% in the previous quarter. Others are losing more sheen on CASA, while this has remained steady for Bank of Maharashtra. Loan growth pretty strong over here, 23.5% YOY and about 4.2% quarter-on-quarter. The CD ratio has improved both YOY and quarter-on-quarter as well. Massive jump on a sequential basis could mean that the net interest margin could remain on the healthier side for them. Yes Bank, quarter-on-quarter, best deposit growth in last 6 quarters and best loan growth in last 8 quarters. Deposits are up 17.2% YOY and about 6.8% quarter-on-quarter. The CASA is up 11.1% YOY and about 6.8% quarter-on-quarter. Again, over here, rare instance, CASA ratio has remained steady on a sequential basis. Advances are up 9.5% YOY and about 5.2% quarter-on-quarter. The CD ratio has come down a bit, 89.85 when compared to 91.26% in the previous quarter. The liquidity coverage ratio, that's improved YOY but declined on a sequential basis. Back to you.
All right, Abhishek, thank you very much for that. Well, more stocks with news flow. Vivek is here with that list. Vivek, good morning.
Well, good morning. First on our list, structural steel tubes maker APL Apollos reports its highest ever quarterly sales volume. Sales volume up 12% on a year-on-year basis, coming in at 6.74 lakh tons. Now, what the company says is that going forward, the value-added products from the current 55% of the total product mix should reach up to 70%. So the outlook there too is quite strong. Next on our list, Titagarh Rail. The company has gone ahead and signed a contract with Gujarat Metro Rail Corporation. This particular contract is for manufacturing 72 standard gauge cars, and the total order value of this particular project is over 850 crore. Last on our list, Polyplex Corporation. An interesting update coming in over here, slightly negative, given the fact that the company that in May 2023 had earlier announced the promoter's intention to sell up to 24.3% stake in the company. This particular time, they've given an update on that development. They're saying that the deal value has been revised downwards, so 24.3% stake will be sold to Dubai-based AGP Holdco for 1,189 crore from the earlier 1,380 crore that was envisaged. Apart from that, also remember AGP Holdco has a call option to raise holding in the company by 3.79 lakh shares.
Okay, thanks a lot for that. In case you missed out on any of them, here's a quick recap of our top stocks. Stocks with positive news flow. There's Bajaj Finance, IDFC First Bank, Avenue Supermarts, Nestle, Bank of Maharashtra, Yes Bank, APL Apollo and Titagarh Rail Systems. While stocks with negative news flow is Vedanta and Polyplex Corp. But let's also find out what's happening in the world of commodities. We have a quick update coming in from Manisha Gupta. Manisha, hi, good morning. What happened overnight?
Well, I'll start with the crude oil prices, where we did see some rebound coming in. We are off the 3-month lows ahead of the OPEC meeting today. OPEC and allies are expected to keep the supplies unchanged, and the markets also are looking at Saudi Arabia's statement suggesting that for the month of November as well, they will increase the crude oil prices for Asian consumers, and this would be a 5th straight month of them doing that. That is what has taken support to prices. The U.S. inventories also have declined by more than 4 million barrels in the previous week, suggesting that the demand is sustaining, and all of that added to the gain in prices. What is not doing so well is the metal prices. So whether it's zinc, aluminum, copper, nickel, we saw all of these commodity prices decline anywhere between 2.5% to 3.5% on back of weak economic data and the strength in US dollar index.
All right, Manisha, thank you very much for that. So that's commodities in focus. We'll take a quick commercial break here. Devin Choksi is going to be joining us with some fundamental stock talk. A little later after that, we will also have the management of MedPlus Health Services to talk about how business is going and plans ahead. Stay tuned.
Welcome back. You're tuned into Bazaar Morning Call. Well, we've been telling you there are a lot of negatives that we're waking up to this morning, but the Nifty has been an outperformer. Even in the month of September, we were up 2%. The US markets were down 3 to around 5%. So we'll have to put in a good fight today to, hold on to that outperformance going by the GIFT Nifty rates. But let's talk about individual stocks. Deven Choksi, directly at DR Choksi FinServ, joins us on the show. Hi, Deven. Good morning. Good to see you in. Deven, the screen is looking a little bit muddled, but a couple of stocks could do well. And Bajaj Finance, they came out with their operational update, which looked pretty good, and they're looking to raise some money as well. How would you approach the stock from these levels?
Good morning, Nigel. Obviously, I think on one side, you are seeing a good amount of consumer demand into the country, and various businesses are confirming that. Other day, we saw the auto numbers. That is also, I think, remaining quite robust. I think probably highest ever numbers that one has seen in this month of September. And at the same time, I think other consumer companies are also suggesting that they are having a very strong demand situation in the marketplace. Bajaj Finance being a retail lending company, they have integrated themselves into different product verticals and also, I think, with different retailers. They are finding themselves in a relatively stronger position because of the stronger uptake in the marketplace as far as the consumer products demand is concerned. Not very surprising that this company is recording just growth, which is basically the main forte of this company of 30% plus kind of a CAGR growth that they are continuing with. I would think that given the position that they are taking about strengthening the balance sheet by way of adding further amount of money into the kitty, in the second half of the financial year, the company should be reasonably doing well with higher demand scenario emerging very, very strong. So from that perspective, I think the company looks pretty interesting, including some of the retail credit franchises of the corporate banks. They too look quite interesting. I think they are equally positioned well as far as I think growth is concerned, due to the credit growth is concerned in the economy. And I would think that banking sector should outshine this particular quarterly result among the lot of other sectors, where we believe that I think this is an opportunity for some of the companies which are right now corrected due to the price correction in the market. There would be an opportunity to buy into these companies for at least a good rally post this correction, which we are anticipating somewhere in November this year.
Okay. Deven, hi, good morning, and thanks for joining in. I wanted your thoughts on what one should be doing with Avenue Supermarts, because, the numbers were not bad. I mean, in Q2, they saw a revenue growth of almost 19%, but the stock just refuses to perform. In fact, this year, it's down almost 9% in what has been a rocking market. Do you see, that story changing?
So, good morning, Sonia. Obviously, I think the business condition remains pretty strong for most of the retail companies, including the Avenue Supermarket, Reliance Retail. And they are suggesting that the growth is going to continue even in the subsequent quarters in this financial year. So there is no question asked on that aspect. However, investors are not finding these particular valuations so comfortable in the current market. And as a result of it, the preference is going to those companies where the valuations have not participated, or the companies have not participated, and I think the valuations have remained relatively lower. So I would think that currently the focus remains with those companies where the opportunity is big, and probably I think investors are shifting money into those pockets. Some of the mid-cap, small-cap companies, including in IT space, they remain relatively more favorite compared to expensive stocks in the retail segment, where probably the upside is seen limited. Nothing wrong with the business, but upside is seen limited because of the stronger valuation that they are commanding currently. So I would think that it's a natural course. Probably I think we'll see some kind of a time correction first, and thereafter I think the participation of the investors coming back into the retail sector in the likes of Avenue Supermarket.
Deven, hi, morning. Any thoughts on Vedanta? It was ended about 4% higher. We spoke with the management, Mr. Agarwal, yesterday. What would you do with it, if anything at all?
Yes, Prashant, good morning. Well, I think one good thing which has happened is that they have created the possibility for solving some of the problems that the group is facing. On one side, you see around 30% plus kind of a capital employed in the businesses like steel and iron ore, in the businesses like power generation business. and also in the base metal business, where the amount of capital employed is about 30% of the total gross capital employed into the business. And on the other side, I think these businesses are not contributing enough as far as I think the EBITDA is concerned. Today, you find that Hindustan Zinc and aluminum businesses are contributing more than 80% to the EBITDA of the group. So obviously, I think the choice will be made at some point of time to knock out those businesses which are not probably contributing enough and at the same time occupying higher amount of capital, which would be possibly released so in order to, I think, settle the debt issues at the group level. So in a way, I think this particular transaction which has been planned, according to me, I think is a transaction which should have been planned much earlier, but it's better net than never. I think that is how I would summarize it. Maybe I think we'll have to see more about execution on this particular transaction. And as we heard the management yesterday, they probably want to see the steel business going off the block or maybe I think monetize faster compared to others. So let us see how it goes. But I think to me, this is possibly opening up the possibility also of expanding the other businesses which are right now consuming cash, but this cash is being fed to sustain other businesses which are consuming higher capital. So in my viewpoint, I think it should result into better outlook for the group as a whole eventually.
Okay. I do want your thoughts on a couple of these stocks in the pharma space, pharma consumer space, that is. MedPlus is the one that we're looking at. So, Deven, just stay on. We have a call with the management now. MedPlus is on our radar because the company's board will be meeting tomorrow and they will likely consider some fundraising. Gangadi Madhukar Reddy, who is the managing director and CEO at MedPlus Health Services, joins us now. Mr. Reddy, always great speaking with you on the channel. Thanks for joining us. I know it's preemptive, but you have a board meeting tomorrow, so just wanted to understand that if you do decide to raise funds, what is the quantum that you're looking at? And in general, what would it be used for? Because you're a zero debt company, so there is, no debt reduction plans. Definitely for expansion is something that you're considering. So can you tell us a little bit about that?
Sure. Couple things. We're doing what we should have actually done at the AGM. We should have actually had an enabling resolution out there. So we just want to make sure that we have it ready. And if the markets hold, and given the fact that, our private label is doing fantastically, we expect to actually increase our margin, and that will actually enable us to grow much faster. I wanted to make sure that we were ready to raise money if the need so arises. That's all there is to it, honestly. I am obviously very, very positive about the prospects of the company, both on the pharmacy side, especially given the response to our private label, and also on the diagnostic side. So given both those conditions, if you really want to expand quickly, I think we'll need money. And for that reason, we said, let's put this paperwork in place and see how things actually pan out. That's all there is to it.
Sure. Just a follow-up here, because we do know of your expansion plans. I mean, you added 150 stores in Q1 and you have plans to add more. And there's also the diagnostics business, right? But where will your focus lie? And in terms of expansion, what does the next 1 year or 12 to 18 months look like?
See, mainly on the pharmacy side. What we'll end up doing is basically growing at the same around 800 odd stores this year. But I want to, if everything works out, then I want to start building up the company for a much faster growth going forward. And that's the reason why we have that money. If I want to go into, let's say, new territories, we'll probably require money to set up warehouses, automate them and everything else and all. And whether I go in the franchisee mode or the regular store, either ways, we are going to require funds to actually start operations. I feel confident that everything is going very well. And I think, we could, if things pan out the way I think they will, be in line for much faster growth. And hence we said, okay, let's keep ourselves ready with some money. That's all.
All right, sir. Mr. Reddy, you're on target with regard to what you want to do in the near term, and you're looking to shore up some funds to keep pace with your goals. A couple of quick questions here. One is, what is the quantum of funds you could be looking to raise? And the second part is, how would it be? Would it be via, preference, warrants? You would have tested the markets, right?
Very preliminary, but it will be equity and it's going to be QIP. It's not going to be a rights or preferred.
QIP, all right. And quantum?
To be decided, but we will take permission from the board to go up to 1,200, but that's the amount we'll decide as we go forward.
Up to 1,200 crores.
Yeah.
Okay. Mr. Reddy, good morning. So this is going to be, when you talk about much faster scale up, I mean, will give you the option for a much faster scale up. Can be inorganic as well, or this will be all building up from the ground, all greenfield?
All greenfield. I really don't see us, buying anyone out there at all.
That's what I was wondering. But are there, the kind of sort of stores that you operate, are there ready-made kind of formats out there which you can acquire? I don't think so. Or are there?
Honestly not. And even if they are, the scale is actually far too less for us to really benefit us. If there's a player out there who's having 80 or 100 stores, really doesn't add too much to us, given the fact that we ourselves are capable of adding 100 a month.
So how many, put some numbers to it. If you decide to ramp up much faster compared to a historical store addition, what would faster mean? What would you go up to? Again, we're talking hypotheticals here, but some sort of numbers would help.
Okay. I would say at least double what we are. But I actually want to think about doing something more than what we're doing right now. We're just opening our own stores and all. We could possibly be looking at a franchisee kind of model and all that. And which means, setting up the brand, setting up the warehouses, setting up a large network and getting in the people. And when you basically, let's say, to go for a franchisee kind of model, you will end up actually investing ahead of time in the back end. And we want to be sure that we have the necessary resources for that.
A franchisee kind of model would actually also bring in some cash, right?
But
the investment required would be lesser as opposed to doing it yourself.
Agreed. But normally we would do one location at a time, and the amount invested in a warehouse and all that would be much less. But if you decide to actually go across the country or across a few more states, then you would do multiple warehouses and all. And that would be, spent up front.
Mr. Reddy, one last question before we let you go on discounting, right? I mean, it's a common topic that we talk about, but I wanted to understand if there's been any tapering off of discounting. The last time I checked with you, you were still giving, I think, 20% discounts for purchases above 1,000 rupees, and a lot of online pharmacies giving over 25% as well. Has it cooled off a bit?
On the online side, more and more people today are trying to actually get closer to the 20. I don't see too much promotion at 25 and all. But what I see is a distinctly disturbing trend on the offline side. I'm seeing a lot of small players go out there and basically say 20%, 22, 25% also. And when we actually have gone and checked out the whole place, what we have seen is small retailers today to match our 20%, put that number out there, but then willy-nilly substitute the prescription for generic drugs, which they sell at full price, and hence they're making up that money. We're also seeing one more, I would say this, even if you could excuse it, there have been significant number of reports in the past few weeks about outright fake drugs in the market. Literally, they basically take the top 20, top 30 or top 50 drugs which are sold in the country. They're duplicating these, sending them through different kinds of services to places like Hyderabad, Bhubaneswar, Calcutta and all, and selling them as if they were basically just selling fake drugs. That's it. Wow. And that is what is propping up the discount for a lot of the small time, mom and pop kind of retailers. Otherwise, we can barely afford to give 20. I'm not sure how a really small store is actually even doing 20. And we have, done a little bit of investigation on our own part. And we've also seen a bunch of reports. We've been talking to drug authorities and all. This is on the rise, unfortunately.
Oh, no, that's a very important point you make. And it's important to put that out, right? That it's always better to stick to quality, because you don't know, you may get a higher discount, but the quality of the product that you're buying can be really spurious. But Mr. Reddy, we've run out of time. Thank you so much for joining us on the channel and speaking to CNBC-TV18. Appreciate your thoughts. All right, let's get back to the markets now. It's the start of a brand new day. Anuj is joining in for a quick trade setup. And before anything, by the way, it's 1 year that Anuj has completed at CNBC Awaaz. So Anuj, congratulations.
Thank you, Sonia. Yeah, the time flies, right?
It really does.
I mean, last year, same day, I was, anchoring in this studio, and I then, took my laptop and went to the studio, which is next door. And of course, I'm still part of both the teams. So feeling privileged that I'm part of two teams and two really good teams, two perhaps best teams in business. So feel privileged.
Actually, it's been
that.
a pretty hard separation for us. We haven't let him go, right? We still keep calling him and inviting.
I haven't gone anywhere. I'm still here, Sonia. Pretty much here.
Right next door.
And far stronger and fitter, Anuj. So kudos to that as well.
Thank you, Nigel. Coming to set up for the day then, and let's start with the chart of the day. This for me is the chart of the day, the FII positioning in the futures and options market, in futures market more particularly. This is net long and net short basically. We were at 66% long after the last series ended, and just look at how quickly that's changed. And now we are actually at 76% short. That's the kind of long-short build-up that we have seen, or rather the short build-up that we have seen. And just to reflect that, yesterday's data, yesterday also 19,261 shorts were added. Now, when you add shorts and keep them open, what does that mean? That you're preparing for a gap down, 76% short. And that's what's happening today, right? We have a gap down staring for us. And that was the case yesterday as well. So I think it's smart money playing for a gap down, but not much after that. There's a gap down, and after that, the market does not do much. And there's a reason for that. That the domestic factors are still very strong. It's a bit of a tug of war between global weakness and domestic strength. Globally, you have high bond yield, high dollar, that's impacting us. But look at the domestic data. That looks really good. Whether it's the quarterly updates, Bajaj Finance, for example, stunning quarterly updates, or all the fundraising, and that too, the books getting oversubscribed like Chola. So it shows that domestically there's quite a bit of strength, but there's a overpowering global weakness that you have. Normally, this phase is the one which turns out as the best buying opportunity, but we'll see if this time it's different. Now, coming to day trade for the Nifty, the outlook, the market's still not broken down. There are a couple of numbers that I'm working with, the two levels, 19,480, which was yesterday's low, close below that, and 19,255, which was last series low. I think that's important. And if you somehow hold that, the market may have, sort of dodged a bullet. In terms of what's working, it's positional short and intraday long. Tough to do, but if you can do that, that's working. In terms of the Bank Nifty, today is the weekly options expiry. On the Bank Nifty, it's actually just three stocks which are very weak, but these three are the top three weighted stocks: HDFC Bank, ICICI Bank, and Kotak. X of these three, the Bank Nifty components are very strong. SBI, all the PSU banks, Axis Bank, they're all very strong, and most of them are actually very close to 52-week highs. Axis, in fact, is very close to a 52-week high. So, on the Bank Nifty, because the top three contributors are weak, you have to be careful. The two numbers I'm working with, 44,200, the first support options-based, and the bigger support is 43,830, which is the last series low.
Okay, Anuj, thanks a lot for that. So that's how the Rao Street is looking as we head into a brand new day of trade. Let's take a quick break on that note. On the other side, Mitesh Thakkar and Sudarshan Sukhani will join in for some technical trades. Stay tuned. Welcome back to Bazaar Morning Call. Now, ahead of the GST meet on the 7th of October, sources say that the Fitment Committee is set to disappoint cigarette makers. While the industry has sought uniform additional compensation cess on cigarettes, CNBC-TV18 has learned that the Fitment Committee has rejected the proposal and decided to maintain a status quo.
Well, sources are telling CNBC-TV18 that the GST Council may have some disappointing news for the EV industry as well, with the Fitment Committee likely to have rejected the proposal to cut GST on EV batteries to 5% from 18%.
On betting and lotteries, the sources say that the GST Council is likely to issue amendments on actionable claims related to lotteries, betting and gambling. Services provided by race clubs and licenses to bookmakers are likely to be charged at the 28% GST rate. Well, Devin is still with us. Devin, thanks for waiting. I think we're approaching the pre-open session in another, 7 odd minutes or so. Just wondered your thoughts. I don't know if you have coverage or if you've looked at PSU banks like Bank of Maharashtra recently, Devin. The pre-quarterly update just came through, super strong. They cleaned up big time earlier. The stock's done well. It's actually doubled over the last 1.5 years or so. Any thoughts?
Yes, Prashant, we do have soft coverage on PSU banks, and we feel that I think having corrected their balance sheets, most of the mid and smaller PSU banks are equally, I think, well positioned in a given situation. However, I think the bigger challenge ahead would be how fast they would be able to expand the size of the balance sheet. That is going to be, I think, a bigger challenge, because on one side you require a larger amount or the bigger amount of money, I think, for the growth that is being produced in the economy. And the bank's prime raw material is always money. So I think obviously they will have to further capitalize themselves. In case they do not, then possibly, or they fail to capitalize in time, then it possibly, I think you will be missing out the bus that would probably take up the larger market share. And that is the only worry that I'm having. Otherwise, all of the equations are working favorable. The balance sheets are clean. The liability side is remaining relatively strong compared to what it was before. At the same time, I think they are protecting the needs, and most importantly, I think they are expanding the business into the MSME space as well. So all of these equations are working positive, except the fact that I think one will have to capitalize the business faster in order to get larger amount of funds. So that is one area which one will have to look out for.
All right, Devin, thank you for your patience and your thoughts here on the channel. Appreciate it. We'll do one thing. We'll take a quick commercial break. On the other side, we will have the pre-opening rates. Also, Mitesh Thakkar and Sudarshan Sukhani will join in for some technical trades. So keep it with CNBC TV18. Welcome back. As promised, we have our technical experts joining in now to tell us how to approach the markets today. You have both Mitesh Thakkar as well as Sudarshan Sukhani joining in. Gentlemen, morning to both of you. Sudarshan, let me begin with you. This market has been in the grip of the bears, for a while. But despite all of that, the Nifty has been resilient at 19,500. Do you think that level could be taken out convincingly on the downside?
Yeah, good morning. I think the levels will be taken out convincingly. And now we have two different trends. The primary trend of the market is up, and then the secondary trend or the minor trend is very clearly down. When we have two conflicting trends, it is best for most traders to step aside. Especially, there's no sense in buying a dip. This is not the end of the decline. The markets have to come down, stabilize, build a base. We are far away from that point. And there's no sense in going short after big gap downs. So the best trade for the Nifty and the Bank Nifty is do nothing. There's no harm in not doing anything.
Sit on your hands. Wise advice, and Sudarshan has been advocating that for the last couple of days, and it's worked. Morning, both of you. Mitesh, to you, what's your own assessment? We are still around that 19,500, which will break today. It'll be, as I was saying earlier, miraculous if by 3:30 we are still around these levels. But your thoughts?
Morning, Prashant. I would agree with that. I think it would be a miracle in case we recover and during the close or around the closing time we are around these levels as well. So I think I've been maintaining a mild bearish bias, saying that a chance of retesting the August lows of 19,200 is very, very possible. Similarly, on the Bank Nifty, the two levels which I'm watching I think one is what Anuj also highlighted, 43,840, 850 zones, and below that 43,450. So I think these are the two levels or two targets which I'm working with on the downside. What I would want to do is that since with the gap down you can't short, you will see if in a day or two if we hit these support levels, and if there's some kind of a reversal pattern on the hourly or the 2-hourly charts, then you might want to attempt a long near the support areas. Otherwise, I think trade with stock specific biases, which again we have more of short side ideas.
Okay, all right. Let's get to some of those ideas then, Mitesh.
Morning, Ajay. For the day, I have a couple of banking names on the sell list. HDFC Bank, it was a sell call yesterday as well. Now can be sold with a stop at 1528 for targets of 1465. A sell on ICICI Bank with a stop at 951 for targets of 915. And a conditional sell on M&M. Actually, I would want to see the stock price break below the pivot of 1527, 1526. Then go short with a 30-point kind of a stop at 1555. And 1470 is the target. And one solitary buy call, Bajaj Finance. It's been making new highs. We have had buy calls earlier here. On a gap down opening, this could be a good entry on the long side, around 79.40, buy with a stop at 78.60 for targets of 8,100.
Sudarshan, what about you? What would your stock ideas be for today?
Well, they're a mix. See, there are two buy ideas which are primarily positional. You wait patiently for the markets to dip as they will, and then try to buy that, adjust your stop losses accordingly. Canara Bank is a buying opportunity with an opening stop loss of 373. Given the gap down, you have to adjust it. Hind Copper is again a buy. The stock had a small, very small decline and a consolidation, an attractive buying chart. Stop under 159. I have JSW Steel, which is making a very large distribution. Something is going on there which is not good at all. It's an intraday short, the stop above 776. And PI Industries, which is already in a big bear market, is another intraday short with a stop above 3450.
Noted that. Thanks a lot for that, gentlemen. We'll come back to you all for another call in a few minutes from now. For the time being, let's shift focus. We have Rajesh Palvia, the VP Technical and Derivative Research at Axis Securities, who joins us on the show. Hi, Rajesh. Good morning. It's looking like a little bit of a gloomy morning, but your trade on the Nifty as well as individual stocks?
Good morning, Nigel. So, yeah, our trend is on the bearish side for the near-term setup, and looking at the data for previous day, there was a short built up on the Nifty and a long unwinding setup for the Bank Nifty. Both indices are under pressure. Now we are trading almost near to the critical put-based support area of 19,500 for Nifty. If at all, if we see any gap down below 19,500, then possibly some more, follow-up selling we can see in the market, and then Nifty may attempt to test next major support area of put base at 19,400. But looking at the weekly as well as the monthly put base concentrations, most of the bats are still there at 19,500, 19,400. So it could be a gap down, but again, these range is likely to act as a good support area in the decline. So if at all Nifty not slip below to 19,400, there could be a pullback action we can see during the day. And possibly Nifty may again, attempt to move further towards 19,500, 19,550 during the day itself. To play this pullback, we are initiating here call ladder strategy, where your risk would be only 20 rupees. So you can buy 19,550 call option, which was closed at around 59 rupees. And you can sell 19,650 call option, which was closed at around 25 rupees, and 19,700 call option, which was closed at 14 rupees. So your outflow is only 20 rupees. And we are projecting that, Nifty may give some pullback action towards the weekly expiry of this series. And possibly Nifty may attempt to expire around 19,550 or 19,600. So you may again in this call ladder strategy. So you can play this strategy for next 1 or 2 trading session. For Bank Nifty, 44,100 is the key level on the downside. If we don't break those levels, then possibly Bank Nifty may also give some pullback from those levels on the higher side. 44,700, 800 are the major supply zone. If we crosses those levels, then short covering may play out in the Bank Nifty, as we have today Bank Nifty weekly expiry. So a Bank Nifty move is also very interesting to see. On the stocks fronts, we are bullish on real estate space, and we expect that, further more momentum we can see in the real estate space, and DLF is looking very promising. Stock managed to give breakout of last 2-week consolidation range. So we are giving here buy for DLF for upside target of 555, 560. One can keep stop loss of 525. Another stock is Chola Finance. This stock is continuously in uptrend. Series of higher top, higher bottom formation is taking place. The kind of long build-up was there in previous session is clearly indicating that this stock may continue further more upside. 1280, 1290 is the near-term target for the stock. One can buy with stop loss of 1235. And the third stock is L&T. Stock is in uptrend and again, buying interest is there in the stock in the previous session also, despite of selling pressure in the broader market. So L&T is looking promising. 31.25, 31.40 is the next target for the stock. One can buy with stop loss of 3045.
Okay, all right. Thanks a lot, Rajesh, for stopping by and giving us those calls. Well, let's turn our attention to the oil and gas space now. Mahanagar Gas has reduced the CNG and PNG prices as the government has lowered the HPHT gas cost. Prabal Sen, energy analyst at ICICI Securities, joins us on the show. Hi, Prabal. Good morning. Well, tell us what caused that big rally in MGL yesterday. The price cuts will lead to more volumes. Is that what you're factoring in? But I also wanted to ask you, because HPHT is not such a big part of their sourcing. So how does it fit in then?
Actually, there are two aspects to this. One, as you rightly mentioned, the price cuts will obviously increase the competitiveness of CNG and PNG prices against petrol and diesel. If you remember, last year at one point of time, because of the fact that, they had to pass on a lot of the spot LNG price increases, the differential between petrol and diesel and CNG had actually dropped to a multi-year low of less than 30%, close to 25%, which is not a very economical level for people to convert or opt for CNG vehicles. That differential, thanks to the price decreases that have happened once in April, because of the reduction in the domestic gas price formula, and now because of the softer HPHT prices, which are expected which are there from the 1st of October, that differential is now growing to more than 50%. So obviously that does create a lot of incentive for people to shift or opt for CNG vehicles. That's number one. To answer your second point in terms of what HPHT is as a percentage, at the margin, if you see, domestic gas allocations have been reducing consistently to the CGD space. They were at levels of around 8 to 9% a year ago, reached about 10%. And currently our understanding is that there are somewhere between, the allocation was about 90%. And now the allocation is actually down to about 87 to 88% from what we understand. So because of that, the extent of HPHT or spot LNG, whatever you can source to meet your priority sector requirements, has gone up to about 11 to 12%. What our understanding is, as far as MGL is concerned, is that they already have around 0.2 MMSCMD of contracted HPHT gas, plus they are also able to today source HPHT gas from IGX, which is the exchange at which certain Reliance volumes are available, to the extent of the balance. So the requirement to buy spot LNG at $13, $14, which even though it's low, is still slightly higher than the current price of HPHT, is negated. So if you combine everything, it creates a situation where they can pass on some of these benefits to the customers and yet have fairly strong margins going forward for the rest of FY24. So those factors have just come together, perhaps, to drive a little bit of positivity.
Okay. Prabal, hi, good morning. Two questions. One, what is your one big pick in that space? And second, if you can talk to us a little bit about refining margins and what's happening there. And is there a big play coming on the back of, refining margins globally being very strong?
Firstly, as far as the gas space is concerned, we have remained fairly positive on GAIL. We do believe that, recovery in transmission and trading volumes, the improvement in tariff that happened, earlier in this year, the steady trading margins, the improvement in LPG prices, the, visibility around the gas costs for the LPG segment, and, a recovery at the margin, even in the petchem segment, means that, earnings momentum will continue to be fairly strong for the state, for the name. That is something that we have maintained for a while now. We remain positive on IGL and MGL in the CGD space. I think both companies, because of the factors I just mentioned, perhaps they're playing out more strongly in MGL, but for IGL also, our sense is that, some of those factors remain relevant. And our sense is if crude prices remain at this strong level, then there's no downside risk to the cap of $75 realizations for ONGC and Oil India. And their gas realizations at $6.50 are still well above their last 7-8 year averages. So those 5 names, I think, will continue to be strong. OMCs, despite, the kind of refining strength that you talked about, at this point of time, I think the kind of losses that are still there in the marketing segment probably will keep the stocks in a narrower range. As far as, your second question, the refining strength is obviously very, positive from a downstream petroleum perspective. However, you have to also keep that in the perspective that there is a windfall tax that is being levied, which takes away a significant part of the gain that Indian refiners can actually make, specifically at least to the extent of the exports that are happening.
Sure. All right, Prabal.
Yeah.
Yes. Sorry, we actually have a market opening in a couple of minutes, so I didn't want to interrupt you at that time. So I thought I'll just end the discussion now, and perhaps we can take this, point forward. Thanks a lot for joining in and speaking to CNBC TV18. But a couple of stocks in focus. Bajaj Finance is, of course, the stock that everyone will be looking at. It's up 0.7% on the back of decent data that the company came out with this time around. You have Avenue Supermarts at the street has also liked the numbers there. So Avenue Supermarts in the green. And APL Apollo Tubes is another one. A strong business update, this time. The sales volume growth of about 12%. So double-digit growth. The stock is up about 0.5%. Been one of the big movers. But let's get some 9:10 calls going now. Sudarshan is back with us. Sudarshan, what's the big call at 9:10?
JSW Steel is an intraday short with a stop above 776.
And Mitesh, what about you?
I'll go with the buy on Bajaj Finance. Stop at 78.60, target of 8100.
Okay, right on cue, a buy on Bajaj Finance. In fact, if you missed out on the news flow, Abhishek, my colleague, is here to get you up to speed with the latest there. Abhishek, over to you.
Well, the Q2 update that they have given is a mixed bag, more on the good side. So the good part of the business that has come in is that the AUM growth of about 32.9% YOY is perhaps the best growth that you are seeing in last 15 quarters. Deposits are up 39% YOY and close to 10% quarter on quarter. The customer base that's remains strong in terms of the growth rate, about 21.7% YOY and 4.9% quarter on quarter. What is not good is that the new loans book is declined by 14.2% quarter on quarter. So Q2 versus Q1, this is the lowest growth or the weakest growth that you are seeing in last 6 years. Liquidity in the balance sheet has declined by 10.24% quarter on quarter, and the cross-sell rate is at 9-quarter low of just 6.5%. We have brokerages who have written on the entity. Morgan Stanley has an overweight rating with the target price being raised to 10,300 from 9,500. Jefferies has a buy recommendation, target price of 8,830 rupees, and Citi has a neutral rating with a target price of 7,800 per share. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, Manglam joins us as well to tell us about Bata. Manglam?
Well, this morning there's a note which has come in from HDFC Securities, and they've said that Bata's premiumization / volume, strategy has actually proved suboptimal as compared to the others. And this is from a period of FY15 to FY23 itself, where the company has actually lost 10 percentage points in terms of market share as well. They've gone ahead and met the management to address these concerns, and the management said that they are focusing on continuing to improve price and product range across all channels. They're looking to improve their distribution and franchise unit economics, and they're looking to also make their cost structure variable, so that would aid their margins going forward as well. But HDFC Securities says that while these are steps in the right direction, they will wait for execution on the above initiatives before they get constructive on the stock, as a result of which they have a reduced rating with a target price of 1,500 on the counter.
Okay, thanks a lot for that. I think we just have about 15-20 seconds left before the markets open for the day. It's not so bad, to be honest. The Nifty is indicating a fall, but it's not like a collapse or anything, about an 80-point fall. Not as bad as what the global market cues are for us. We've had a steep sell-off from across the world, especially in the Dow Jones, which has now erased all of its gains of 2023. The US 10-year yield is at a multi-year high. You have large-scale FI selling. Given all of that's thrown at the market, the Nifty is still resilient around that 19,500 mark. Let's see. Maybe it's too soon to tell, but for now at least, looks like the losses are restricted around that 19,440 odd level. A couple of stocks, of course, that are batting for the bulls this morning. There's Nestle, which is up about 2%. There's Bajaj Finance, up about 0.7%, and a couple of auto stocks. So there you have it. The first tick on the index. It is getting ugly now. About 100 points gone on the Nifty at 19,400, just holding on by the skin of its teeth. The sensex is down about 400 points, so not a great start for the market. The bank Nifty is down 330 points, and the advanced decline ratio is well in favor of declines, actually over 1,100 stocks. Let's keep it with the losers, just to give you a sense of what's happening. The cement stocks are dragging their feet, in fact, dragging the index. Ultratech Cement, Grasim, down anywhere between 1 to about 3% and steel stocks, Tata Steel, Hindalco coming off. Auto stocks, Maruti, Tata Motors are in the red. Bajaj Finserv has some news flow going for itself, so that one is also down about 0.3%. And then you have other heavyweights like Infosys, HCL Tech, SBI, Kotak Mahindra Bank, ICICI Bank, L&T. So it's really a secular move on the downside. On the upside, Bajaj Finance holding up just barely, up about 0.3%, pivoting around that 88,000 rupee mark on the stock price. And Nestle India is up about 2.5%, batting for the bulls there. BPCL is also holding up a tad bit, but otherwise, it's actually a market that's quite weak. It's opened up well in the red. The mid-cap index is down about 250 odd points. There's a steep sell-off across a lot of these, recent favorites, whether it's something like a Zomato, Ujjivan Small Finance Bank. So I guess a lot of profit-taking happening today.
Well, that's right, Sonia. A few stocks are doing well, though. JSW Infra had a good listing yesterday. It's building onto that. That's up close to around 4.5% as we speak. Suzlon had a good close to trade. Well, that one as well has opened up well in the green. So that's up close to 2.5%. And volumes are very, very high on a couple of these names. A smaller name like a GVK Power, well, that's up close to around 5%, but that's only a 13 rupee stock as of now. In terms of frontline F&O names, very, very few stocks are trading in the green, but Nestle is one stock that's opened up. Strides yesterday was a little bit weak. That's pulled back today. And from the cement pack, you have Ramco Cements that's up close to around 0.5% odd. MGL, it had a good run yesterday. It's building onto that. That's up close to around 1% in today's trading session. The problem for the markets is now we're trading closer to around 19,400. Last few days, we've been going to around 19,470, 19,480 and bouncing from there. As I said earlier today as well, the Nifty Bank is a crucial component. It's opened up weaker than the Nifty. It's down 0.8%. It has the weekly expiry that plays out today. And ahead of the RBI meet as well, you'll want to defend this band of around 43,800 to around 44,000. That's going to be the index to watch, and that can swing it either which ways. For the time being, the bears are feeling on top. Prashant, for that.
Well, almost from being slightly above 19,500, we are only 5 points above the 19,400 level. The lower end of the Bollinger Band, the daily Bollinger Bands is around the 19,360, 70-ish levels, which we put out in the morning. So you're basically there. Now we need to see if those kind of hold or not. You got pressure, clearly. Market breadth is 2:1 in the negative. So almost 1,200 stocks are lower and about 650 stocks are higher. That's what's coming through. I'll start with what's down with volumes. IDFC First is down 2%. So that is coming up with some volumes. Ujjivan Small Finance Bank had a decent up day yesterday. That is pulling back about 1%. Maruti is down 2% on the back of large volumes. And there is Zomato, which I think made a new 52-week high. That's down about 2% this morning. Jubilant Food is another one, which is down about 1% or so, 534 on Jubilant Food. The Bajaj twins, both Finance and Finserv, did well. They were the top Nifty gainers yesterday. They're down about 1.33% to 1.5%. Max Healthcare was up 4% yesterday. That is down about 2.5%. These are basically, small reversal moves off of what happened the previous day or the prior week. Nothing more. M&M Finance is down about 2.5%. There was a pre-quarterly update. SAIL, NTPC are some of the other names which are coming up on the downside. Another one of these reversals, like Metro Brands was up 10% out of the blue yesterday. That is starting 4% lower. So a little bit of pullback on some of these names. On the other side is what we are seeing. On the way up, JSW Infra, the listing from yesterday, that is the top volume-led gainer. I think ended 30% higher. It's up another 4% this morning. So 163, 164. And with this pop, the gap with Adani Ports, which is the number one player, JSW Infra, in terms of capacity on the commercial port sector, is number 2. The valuation gap is narrowed quite a bit. Of course, Adani is far larger, but the valuation gap is narrowing. Nestle is up 4%. I think Nigel mentioned that. Bank of Maharashtra is up 2.6%. Good numbers. Suzlon is up about 2.5%. Stocks back almost at 28 rupees now, Suzlon. So that is pushing higher. And there is something like a Titagarh Wagons, which is coming up with some gains as well this morning. Dhanalakshmi Bank had a big day on the upside yesterday. It's following through with a 4% gain this morning as well. So, yeah, I mean, that's essentially what's showing up on both sides of the market right now. 130 points lower is what we have at about 19,400. Anand Shah is with us, head of PMS and AIF investments at ICICI Pru Asset Management. Anand, good to have you with us here. Thank you very much for your time. We had Naren with us a week and a half or back, and his view was kind of clear that maybe this is the year for large caps now. I mean, the remainder of the year, at least. Is that how you look at things as well, Anand? I mean, what is your own view, near to medium term, with all that is going on? And there is a lot going on. Go on.
Hi, very good morning. Yeah, indeed. And this year is going to be more bottom-up than top-down. Obviously, it's a tug-of-war between relatively stronger fundamentals in India versus what's happening globally. You're watching, especially US, the 10-year has moved up significantly last 1 month. China is obviously crawling back from, slowdown, and to that extent, there's a slow but a steady recovery out there. But otherwise, you don't have great news coming out from global markets. On the contrary, India relatively looks a little stronger. Obviously, a lot of things going for India, and to that extent, this year belongs to bottom up. And when you sort of scan the market, obviously we find a lot of value in large caps relative to the mid and small caps. So that's true. Nevertheless, when you do a more of a segmental and more of a sector-wise analysis, we will have winners within the mid-cap and small-cap. So we've been more bottom-up, and that is the way forward, at least this year.
Okay, you've been more bottom-up. Got that. Anand, hi, good morning. In terms of sectors, how are you positioned in the NBFC space? We had some pretty decent numbers that came in from Bajaj Finance, but these are stocks that are, already at 52-week highs. Do you see more valuation and growth upside here?
No, within the financial services space, we actually prefer banks over NBFCs. Given, you have to also appreciate that banks actually had a very tough time between 2015 and almost all the way up to 2020, 2021. And in that period, obviously, there was a significant derating in banks and re-rating in NBFCs. Also, to that extent, relatively, the competition coming in from banks within the overall market was weaker as they were grappling with NPAs and recovering and fixing their own balance sheets. I think going forward, while there would be winners within NBFCs also, but our take is that the bank is better placed, both in terms of growth, in terms of competitiveness, as well as in terms of relative valuations. I think we would at least we prefer banks over the NBFCs at this point.
Okay, all right. Anand, just hold that thought. Jubilant Foodworks is a stock that you should be keeping on your radar because there could be an offer that's underway, but they've slashed the prices on large pizzas big time. And they've sent it to all their clients out there. So that could be a stock in focus on the large pizzas. On the veg side as well, it's down from around 799 rupees to around 499. On the non-veg pizzas, well, it's down from around 919 to 549. Could be ahead of the big event. That's the ICICI World Cup. That's going to be kickstarting later this week. So that could be one of the stocks that should be on your radar. Competitive intensity, I think, is going up. And I think as a snack, I think the demand as well for pizzas has been going down. I think burgers have been coming to the fore.
Some have said, and not all agree, and I remember posing this to, I think we had someone as an analyst, price points are lower, right?
Yeah.
For burgers. So maybe it is in a high inflationary environment, down trading. I mean, of course, there is, of course, intense competition in the pizza space as well, but maybe a little bit of down trading from high price pizzas to slightly more affordable burgers. That's one explanation. But of course, this is in the realm of theory. We'll have to talk to companies to figure out why this is
I'm just feeling really hungry looking at that offer. You know, I mean, the non-veg pizzas has all the sort of salami on toppings.
Go
the
ahead,
veg
Sonia.
pizzas.
I mean, right on cue. Make the order.
World Cup or no World Cup, right? I mean, getting hungry here. But I mean, that's actually a good question that we can even pose to our guest about what the the way forward could be in this entire QSR space, right? Anand, how are you feeling about it? We're entering into this big event, which is the World Cup. All the QSR companies, even the platform companies for that matter, Zomato has picked up in a big way. But there is a lot of competitive intensity within segments. How are you approaching it as an investor?
No, indeed. So obviously, any segment that has a growth obviously is a good opportunity for equity investors, but it also always attracts competition. And what has changed in the QSR space, and especially within QSR in the home delivery space, is what Zomato and Swiggy would have done is it's now all pervasive in the sense you can get delivered anything and everything, and it's not only pizza that used to be a decade back. So I think to that extent, competitive intensity in general has increased, and rightly so, given globally food is the biggest industry and it would attract that sort of entrepreneurs and the capital. So that's happening in India for sure. But even within the delivery space also, it's actually a couple of notches up in terms of competitive intensity. So it's a tough business and a very difficult one indeed. To crack and continue to maintain leadership, because obviously there is always change in the taste, and to that extent the customer loyalty, if you would have observed yourself or any one of us, we don't have a great loyalty for the same food as we keep on trying new stuff. It's a tough business.
Okay, all right. Anand, since we're talking about the World Cup, a couple of sectors could be in focus. Case in point being the hotels or the aviation spaces. Well, and some of the stocks have already seen a big run. Now, Q3 is going to be seasonally strong, and also you have the World Cup. Do you think some of these themes have already played out, or do you think the best is yet to come for them?
I think this is something I was discussing even, that these are the certain sectors which have actually had a very, very painful long periods of time, like telecom, like airline, or for that matter, even hotel. And to that extent, we have seen a significant consolidation in this industry, in the sense that the new hotels are not being built, not many new aircrafts are coming through because of the OEM issues, but even we have seen consolidation both in telecom and in aviation. To that extent, I think notwithstanding World Cup, I think and our philosophy is one of the key ingredient when we look for in our stock picking is consolidation of industry. I think aviation, hotels, and even telecom, they all fit through in terms of increased pricing power for the manufacturers / service providers, and less of the pricing power for customers like you and me. And to that extent, we would be in years to come paying more for these services.
Okay. Anand, we'll leave it there. Thank you very much for joining us. It's a pleasure having you with us here on CNBC-TV18. Well, we're down 130 points. 19,370 is where we are at. I just want to take a quick sort of stock of what's happening in the market because, yeah, I mean, it's down and out, and a full 2:1 declines to advances ratio is what we have, with about 15 minutes of trade behind us at this point in time. On the downside, Axis Bank is coming up right on top with large volumes. It was not there when we looked at it right at market open, 2% lower, and it's top traded stock now in terms of volumes. Maruti, Zomato, IDFC First, etc. I mean, they're all right there. M&M Finance has picked up a little bit more on the downside. It's down 4% now, almost 4%. And there is Mahindra and Mahindra, which is down about 1.6, 1.7% as well. IDFC Limited is another one, which is down about 2 3/4%. I think some of the others, of course, we've been talking about, like Metro Brands. These are essentially reversals after very sharp moves that we saw yesterday. Lodha is down 2, stocks at about 772. Shriram Finance stocks done very well. One of the largest, commercial vehicle financiers, down 2%. JSW Energy is coming up with a bit of a cut. Quick Heal has done very well over the last 1 week or so. That is seeing some reversal of about 2.25% or so. So yeah, I mean, buzzing kind of screen, but on the wrong side, the wrong color.
That's the important part, right? I mean, the Nifty really is cracking hard now. So it's 135 points gone. The Nifty has given up on 19,400. The Bank Nifty is the one that's really taking it on the chin. So 400 points gone over there. We, of course, I think preempted this given the weak cues that we had, but somewhere the bulls were also, taking hope in the fact that we were resilient so far with everything thrown at us, the kitchen sink thrown at the market, but we were resilient around 19,500, but that is given up now. Bank of Maharashtra is definitely the stock of the moment because of that big move, not only in terms of price action, but volume action as well. And a very strong, business update from Bank of Maharashtra. Over a 22% growth in deposits, CASA growth is over 10%, and advances have also grown about 23%. So there are some outliers, but otherwise the market is in a pretty bad shape.
Yeah, and the other one is IOB, the very limited float in the market, but that stock is 50 rupees now. And the volumes are rather high on that stock as well. I think only around 2.5% of float in the market, but the street seems to be bidding that one up, so that as well is higher. IOB, Bank of Maharashtra, Dhanlaxmi Bank, all of them moving higher. And IFCI, I think in the last 1 month or so, that stock has moved big time. Remember, 10 years or so ago, that was a stock that there was a lot of interest in. But, that one, today it's up 2.5%, one of the highest volume traded stocks. And the last 1 month or so, I think that one as well should be, it's up more than 50% just in the last 1 month. And Suzlon, that's a theme that the street is latching onto. Yesterday as well, it was frozen in upper circuit. And today as well, the stock has opened up with a gain of around 2.5% street. After they did that fundraise, they seem to be a little bit more confident with regard to the prospects out there.
Okay. By the way, HDFC Bank is revamping some parts of its top management 3 months after its mega merger with HDFC. That was, of course, the big talking point in the last many days and the reason for the HDFC Bank underperformance. Well, this according to sources who say that the bank detailed the changes in a memo to employees late on Sunday. Ritu, my colleague, is tracking that story closely. Ritu, over to you.
A major top management rejig, but an expected one at that after HDFC's merger with HDFC Bank, with the bank CEO Shashidhar Jagdishan saying these changes were made to bring in a sharp focus to leverage what the bank has built as the runway for growth is large. Now, one of the biggest change comes in the form of a dedicated head for the mortgage business, which now forms almost 35% of the loans after the merger. The former head of retail assets, Arvind Kapil, is going to be spearheading it. Arvind Vora, who was previously looking at retail branch banking, will now head retail assets. Second, HDFC Bank veteran Ashish Parthasarathy is going to take on the responsibility for retail branch banking in addition to treasury. But importantly, the retail branch banking business itself has been split into two according to various regions and will be driven by Smita Bhagat and Sampat Kumar, who will report into Parthasarathy. This is important because while HDFC Bank already has about 8,000 odd branches, it is looking to add 2,000 more every subsequent year. Now, third, in what is a clear step towards a bigger digital push, HDFC Bank's entire IT and digital function is going to be consolidated, report directly into the CEO. Ashima Bhatt has been tasked with creating a bank within a bank, which will essentially serve as a virtual relationship channel to service customers who may not necessarily need a physical touch point and help the bank meet its objective of creating a new HDFC Bank every 4 to 5 years. A new Chief Digital Experience Officer post has been created, a dedicated head for creating banking as a service, and all consumer-facing digital products are now going to be run as direct-to-consumer digital businesses with their own separate P&L. There are other changes as well, but overall this means a sharper focus on retail and a bigger role for all things digital at HDFC Bank.
Okay, well, I think a lot of interest around that one name, HDFC Bank, and what that means. I mean, it's been a huge underperformer, and perhaps there is valuations, of course, as compared to the last 10-year, 15-year mean on a price-to-book basis are also lower. So it's been it's cheaper, the cheapest in a while, actually. The market, look at that, about 150 points down now. So it's not as if we've seen a turn or anything. We started down, and instead of a bit of a bounce, it's actually falling more. So 19,377 on the index. So we're actually at the levels that we put out in the morning, which is the lower end of the Bollinger Band. Straight off the bat, within the first 30 minutes of the market open, we are there. Just a quick look at what's happening, in the region as well. Of course, the Chinese markets are shut, but other markets in Asia and what they're doing. So Hong Kong, for example, had been under pressure. It's actually the market which has done the worst over the last couple of weeks. Taiwan is on your screen, down about 1.25%, and the Nikkei, etc. With what's happening with the Japanese yen, I think there is a bit of a bounce which is coming through. But otherwise, the dollar against the yen has been rising. I think it broke the 150-odd level. But there is some pullback which seems to be going through. There you go, 149.27 or so. So this is a bit of a global issue that one is facing at this point in time. There are, we were talking about HDFC Bank. There is a second quarter update as well, which is flashing at the bottom of the screen. This is coming through. We'll have more on this one with Abhishek. Advances for the first quarter, we'll have to, of course, look at this. And I'm not sure if these numbers are comparable, but advances are up 60% for the first quarter. And 44%, on a quarter-on-quarter basis. I don't think these will be comparable. And we'll have more details coming through for the HDFC Bank second quarter update, the pre-quarterly update, which many of these companies are putting through. On the broader market, what else is going on? I think we're right there. So nothing incrementally, maybe a few more names. Tata Power is down about 2% or so. There is L&T Finance, which is down about 2 3/4. Idea is coming up with about a 2% cut. And Manappuram is another one which is coming up with about a 2.25% sell-off at this point in time. So this is a different day as compared to what we've seen over the last many sessions where it's not looked bad. It's not looked this bad. And generally the markets kind of scrape through even when we've woken up to 1.5% cuts from overnight. This seems to be a little more.
I just want to mention M&M Finance, if we can pull up that stock. Despite a strong disbursal growth this time, the stock is actually down 4%. So maybe the market is in general in a mood of profit taking. Look at M&M Finance now 5% lower. In fact, Abhishek is joining in. He's been tracking all of these closely. Abhishek, first on Bank of Maharashtra, which has of course done very well, and the stock is also bucking the trend today. Go ahead.
Well, Bank of Maharashtra, in terms of the business momentum, it's been an absolutely brilliant quarter for them. So take a look at the deposit. It's grown by 22% YOY and a decline of 2% sequentially. CASA is up 10% YOY and a decline of 2.6% quarter-on-quarter. Despite that, the CASA ratio is perhaps one of the best in the industry at 50.7% when compared to close to 51% in the previous quarter and about 56.3% on a YOY basis. In terms of loan growth momentum, that's pretty robust at 23.5% YOY and about 4.2% quarter-on-quarter. So there is a sharp jump in the CD ratio, that is a credit to deposit ratio, which is up to 76.5% when compared to 71.9% in the previous quarter, indicating that net interest margin could be on the healthier side in Q2 when compared to Q1. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. By the way, it's not stopping actually. At least the first few minutes, the bears are going to be feeling very, very good. The markets have gone deep. The Nifty Bank is just holding on to that 44,000 odd mark. And a few stocks, that are moving low. You have NTPC, that's been a big outperformer. That's seeing some selling as we speak. ICICI Bank, that's the lowest we've seen in the last 3 months or so. Axis Bank has moved lower. Maruti Suzuki for the second day running, that's down close to around 2% approximately. HDFC Bank, well, it's reacting to that quarter 2 update. I don't know whether that one has corrected enough, and today it wants to bat for the bulls, but the bulls will be counting on that because at least from the lows of the day, the stock has seen a big recovery. Advances up close to around 57% on a year-on-year basis. On a sequential basis, it's up close to around 44% odd. So we'll get you a deeper detail into this in this, but for the time being at least, the stock has recovered a goodish bit from the low point of the day. So further analysis on that, and that could be a key stock to track given that it's a Nifty Bank expiry. Well, let's move on. Then we have BLS International. Remember, 2% equity changed hands at an average price of around 250 rupees. Shikhar Agarwal, the joint MD at the company, joins us on the show. Hi, Shikhar. Good morning. Thanks so much for speaking to us here on CNBC-TV18. Well, we saw that large trade yesterday, but we're not sure who were the parties to it. Do you have any details?
Holding is considered. We are fully intact. So we don't have any idea. I also saw after, in the market, there was some good volume that happened yesterday. But maybe existing investors must have changed hands.
Okay, all right. So no big clarity, but you're not part of that deal. Great. Let's focus on the other big issue, the Canada visa services. Is it functioning or is it not? What is the latest update on that front?
No, see, as per our operations in Canada, where we work for the Indian Embassy and the US Embassy, we had already announced that the Indian visas had been suspended because of operational reasons, as per instruction received. Now, the impact of this on our overall revenue is less than 2%. Since we are also providing a lot of other services like consular services like passport renewal, OCI, and different kind of application processing for the diaspora abroad.
Okay. Shikhar, just want to get back to the earlier conversation. I want to understand the promoters recently sold some stake. It still stands at a little over 71%, but any intention that the promoters have to sell more stake in future, and where are they comfortable keeping this overall stake at?
No, we have no intention to sell any stake in the company. This was, I think, we already discussed this a couple of months back, that we had reduced the shareholding to 71%, and that was it. And we have no intention of reducing any shareholding further.
Okay, no intention of reducing your shareholding further in the company. So you'll keep it at this 71% plus level. Got that. On the Canadian visa, just trying to understand what will the exact impact be? I mean, you said that it's going to be 2% of your business contribution from this development, but can you explain how you have arrived at this 2%? What are the volumes exactly that you service? What is the kind of margin impact that we are looking at?
So there will be no margin impact. As you have seen in the last quarter, we have achieved an EBITDA margin of 20%. 85 crores. And, there has been a growth of 150% in EBITDA level. We've done 80 crores of EBITDA. So, we expect to, continue that momentum. Because of this suspension, for us, we are working in 64 countries, working with more than 40 governments. So it does not really impact our numbers.
Okay, Shikhar, but you'll be having staff out there, right? So the revenue stops, but there'll be some operating expenses. How does it work?
No, see, we are definitely seeing a surge in applications and renewal of passports and different kind of applications. As I've said, there was a negligible number of physical visas that were being issued, by us. So it was an impact of only 2% on our overall revenues. So we don't see any impact because of this development on our revenues.
Okay. Can you tell us what is the utilization of the cash that you have on your books? What is the utilization plans? I think you have over 640 crores of cash. Any M&A plans that you have? Anything else that you'll be utilizing this money for?
Definitely. As you know, last year also we did a major acquisition, 150 crore odd company that we acquired called Zero Mass. Where we have Incorp now, there's a step-down subsidiary called BLS E-Services. All our e-governance and bank correspondent business incorporated into that. At the same time, we are looking at acquisition of sourcing space also globally. So definitely there will be a cash utilization in acquisition opportunities and the new contracts that we are looking at, in deployment of those, for centers across the world.
Okay, Shikhar, good speaking with you. Thank you very much for joining us, and thank you for taking out the time and being with us here. So that's the management of BLS. Well, now, on to a story that we reported yesterday. Sources say that the government's Expenditure Finance Committee has approved home loan subsidy scheme. It is expected to be part of the PMAY scheme, and the size will be about 60,000 crore rupees over a 5-year period. Mr. Dinesh Kumar Khara is chairman of the country's largest bank, State Bank of India. He's joining us on the phone line to talk to us about what this could mean. Mr. Khara, it's a great pleasure to welcome you as always here on CNBC-TV18, sir. Thank you. Prashant here. Could your first thoughts, sir, on this particular development, and what would this mean in giving a thrust to the home loan segment, the housing finance segment?
Thank you very much for having me on your channel. And when it comes to this particular scheme and the broad contours which I've read today in the newspaper, it gives you an impression that it will certainly be a very positive in terms of increasing the demand for home loans and also for the homes in general. Because what we had observed that the earlier scheme had a lower cap, and also on account of the cost escalation, many of the borrowers were not eligible to avail the benefit in this scheme. My sense is that it will be a very major positive boost for pushing the home demand.
Mr. Khara, I mean, you have the best bird's eye view of how the previous efforts have panned out. You said there were some hindrances, lower cap, etc. Could you tell us the experience of the the scheme as it was being implemented so far? What was the size, the quantum?
Implemented very well.
Yeah.
No, so far it has been implemented very well. The PMAY urban scheme is very well implemented. The only thing is that over the period of time, the cost goes up, so which actually means that some people who would have been otherwise eligible, but on account of the increased cost, they were not eligible. So in this particular effort, even those people will also be covered. So that is what my understanding is.
So this limit of 50 lakhs was lower earlier.
Yeah.
So this now raises that cap.
It was actually lower. It was lower. So now that has been increased.
Okay. And any sense on how this could boost demand? I mean, by how much? Is there a broad sense how to look at the numbers? 60,000 crores over a period of 5 years is what we have.
I expect that broad number. It is actually back of the envelope calculation. Another maybe about 50 lakhs plus home loans could be granted, 50 lakh plus. So it was already about 1 crore plus, which was there in the PMAY urban. So I think this will add to at least another 50 to 60 lakh more home loans.
50 to 60 lakh home loans over a period of these 5 years, sir?
Yeah.
Okay.
The current scheme had covered about 1.2, I think about 12 million. That is the number which I have rough estimation. So almost 50% of that can be added in this particular scheme.
That seems to be a very meaningful addition, sir.
Yes, absolutely.
And what would these would be generally, I mean, in your assessment, closer to that 50 lakh number, sir, in terms of size, or would it be lower in terms of the size of the loan?
It would be somewhere around it is just back of that envelope calculation. Maybe we'll have to look into it in more closer terms once we have the contours of the scheme. But broad assessment is somewhere around like that. Around
just under 50 odd lakhs is broad assessment.
Yeah, that's right.
Okay. What is SBI's share, sir, of the sort of annual home loan market?
We have our market share would be somewhere around 30% or so.
Okay, so you're the largest player in the space.
Yes, you're right. We are at about 6.7 trillion.
Okay, 6.7 lakh crores. Got it, sir. Sir, since I have you on the line, if you could just answer a few more questions. What's your assessment of rates in the system, sir? Because the big story, the big talking point has been US interest rates pushing higher to unprecedented levels, and that pulling rates around the world higher. I mean, here in India as well, we've been impacted to a lesser degree, but we have been impacted. What is your own assessment, sir? What this will mean for financial entities, banks in particular?
As far as Indian banks are concerned, we have got our liability mix essentially coming from the domestic market. And domestic market is to a greater extent quite insulated from the global financial markets as far as the banks are concerned. So I think to that extent, I think we'll have to probably wait and watch for having a very clear trend. As of now, we don't see much of a challenge. Whatever we are observing cannot perhaps be termed as a trend line.
In the first quarter, most banks and financial entities saw some compression in net interest margins, sir. Would you expect some of that in the second quarter as well?
I think we'll have to wait and watch. I will not be in a position to comment right now on this.
Okay. So we are also talking to you in the week of the RBI policy. Any expectations?
We expect it to be pause.
Okay, a pause. All right, fair enough. Mr. Khara, it's a pleasure, sir. Thank you very much for speaking with us here. I know we've got a busy schedule, but thank you very much for taking the phone call and explaining the impact of the home loan interest rate subvention scheme, which, as we reported perhaps is going to be rolled out. No firm timeline yet, but it's a large one. And Mr. Khara said there were about 1 crore loans which were dispersed under the previous PMAY scheme, and he expects about 50 to 60 lakhs 50 lakh home loans under the new one. So this is, of course, over a period of 5 years. So pretty meaningful bump for, of course, large banks, etc., but even for home finance companies, which are much smaller, which will also mean that the needle moves in a much larger way for the smaller companies and not for larger entities like SBI, which basically are giants in the system. 30% market share in the home loan segment, as Mr. Khara pointed out. Just a quick look at the market before we go any further. I think
bounced off a little bit.
A little bit of a bounce, so that is good to see. From being down 150, 160, I think there is a 40-odd point bounce, Nigel.
Yeah, there are few stocks. The heavyweights are putting their hand in there, and they're putting their hand up to get counted. One is HDFC Bank. Post that quarterly update, it's bounced close to 100% from the day's low. The other stock is HUL. Pull up the intraday chart out there. That stock as well is batting for the bulls as we speak. And ITC, post the long-awaited announcement with regard to their hotel business, the stock has seen a correction from around that 495 odd. It went down to around 435 odd. Now that stock is seeing some bit of traction just in today's trading session, pulling back from the day's low, and tightened for the second day running. That stock as well moves to the high point of the day. So select stocks, they're trying to put in a bit of a fight. We're still hovering around 19,400. The day's low is around 19,380.
Absolutely. It's quite a resilient piece, right? I mean, despite all the bad news thrown at it, the market is holding on to 19,400. And the space to be in, is FMCG. I mean, not just ITC. You have HUL, which is holding up quite well. Nestle is in the green. Avenue Supermarts is now up over 2% And Nestle, of course, there's that board meeting as well where a stock split will be discussed. The board meeting is on the 19th of October. So in the run-up to that, the stock is up about 2%. So the entire piece, this FMCG piece, is looking pretty good. Let's do one thing. Let's take a quick commercial break. On that note, on the other side of the break, Jose Perez of the S&P Global Ratings will join in to talk about what they've made of the inclusion of the Indian bonds in the JP Morgan Emerging Market Index. Do stay tuned in for that.
Welcome back. You got the market bouncing up a little bit, so that's good to see. We are back above 19,400, as we pointed out. Now, Jose Perez Gorope, head of research and emerging markets at S&P Global Ratings, is joining us now to talk to us about the impact of the Indian government bond yields being included in global benchmarks. For starters, the JP Morgan bond index. Thanks very much, Mr. Perez, for joining us. Good morning. I hope I got your name right. Please correct me. Feel free to correct me if I did not. And thank you. I know it's a early hour for you, but it's a big one, right, for India, for any country, for G-SECs to be included, government securities to be included in a global bond index. And I think it's coming to the fore in a very large way because of what we are seeing globally, which is that interest rates in the US are rising to unprecedented levels. And the hope here is, because of this announcement, there will be a little bit of pre-positioning which will happen from foreign investors into government securities, and it'll keep yields at lower, manageable kind of levels. I just wanted your first sense on the impact that this will have starting now.
Yeah, thank you very much for the invite and greeting to your audience today. Good morning. So it is positive. Let me just summarize by saying that it is a relevant step. Usually, when a country gets included into these indexes, there's a boost in the inflow of foreign investors into domestic government bonds. This is because foreign other investors will be tracking these indexes and entering and including in their positions Indian bonds. Now, that being said, I think we believe that the impact will be gradual, and that it's very hard to estimate at this point the magnitude of the complete effect of the inclusion in this particular index.
I just wanted your own assessment of what happens to sort of cost of capital, both. I mean, let's just talk about sort of cost of capital on the debt side. There is perhaps going to be an impact on cost of equity as well. But your experience from other countries when this has happened, does it structurally reduce, cost of funding, cost of debt in the system for corporates?
Well, in the particular case of India, the current participation of foreign investors into government notes is very small. It's 1%. So we do believe that there's a large, road to go in terms of how much foreign participation can grow into India's public sector. Now, right now, India's public sector, including the central government, has funded projects primarily from domestic markets, and this has caused some sort of crowding effect provision to the private sector. And the private sector has therefore capitalized on equity markets and using other alternatives. If the entrance into this index and there's, there will be additional participation from foreign investors and this frees up domestic capital to be invested elsewhere, it could potentially boost the domestic corporate bond market. And this might have a positive effect into return, into the capital cost for corporates. Now, there's no automatic guarantee that domestic savers will choose to buy corporate bonds, and they might as well also place some extra available funds into equities or bank deposits or increase consumer spending. Which bonds they buy and the degree of risk premium they seek when they switching from government bonds is still to be determined. So in summary, we expect a process of domestic corporate market development to be positive, but gradual and not necessarily on a smooth sequential basis.
So if the foreign participation in Indian bonds goes up on the back of many of these inclusions, right? There are a couple of more inclusions that are expected from the likes of Bloomberg, etc. If the foreign participation does go up, how much can it go up to in both percentage terms as well as in value? What are we looking at over the next 1 to 2 years?
It's hard to say. I mean, when you look at the other peers in global markets, it also depends on how the government manages the whole inflows, right? So it's hard to say. What we've seen in other emerging markets is that this participation could go up from 20 to 30%. But, at this point, we wouldn't set this threshold for India. In our own report, we did make a projection that if it gets to 10%, it will be relevant for corporates in terms of the potential free allocated resources that the corporates might get access to in the future.
So as a percentage, what is your forecast in terms of how much the funds for corporate debt could rise to relative to nominal GDP over the next, say, 5 to 10 years?
It will depend. And once again, there's no guarantee that those funds that have been liberated in the market will go straight to corporations, right? We did make an assessment, it's not a forecast. It's an estimate that if it goes to 10%, it could triple by 2030, and that's in an article. However, it's not guaranteed. I mean, many things need to happen over the next couple of years for that to actually materialize.
Got it. By the way, Mr. Perez, as we are speaking with you, there is news coming through on wires that the Bloomberg Global Aggregate Index, the other bond index, they perhaps may also consider including government bonds in that index. And I believe that is the largest of the three. JP Morgan, there is, of course, the Bloomberg Index, and then there's the FTSE. JP Morgan is the smallest in terms of AUM. Bloomberg is the largest. Would you expect others to follow and take JP Morgan's lead?
Yeah, that's a relevant possibility given India's relative position against the emerging markets. Right now, there's a lot that the government has been doing in order to be included into these indexes, and also there's a lot that the government is doing in order to boost foreign investment in different productive sectors of the economy. For instance, it has provided some additional incentives for the sectors of electronics and information technology, and also into automobiles and other components. So, of course, if this is the case, and given the foreign interest for India as a country, it could be a possibility for India to be included in other indexes.
All right, we will leave it at that. Thanks a lot for joining in and speaking to CNBC-TV18. Appreciate your thoughts here. By the way, there's a new listing that is going to happen in, I think, just minutes from now, or I think it's already taken place. The Updater listing is what I'm talking about. Okay, there you have it. Updater is the new kid in town, down about 2% in opening. The company actually, I mean, in case you are not aware, the company provides cleaning, housekeeping, heating, ventilation and air conditioning equipment, largely for manufacturing companies. So their key clients are, you know, the likes of Hyundai, Eicher Motors, Honda Motorcycle, etc., Saint Gobain, TTK Healthcare. So they provide all of these kind of servicing, electrical plumbing. So that's basically business support services is what they're into, which is about 30% of their overall revenues. So the issue price was about 300 rupees. It's a slightly, you know, weak listing over there, down about 2.5%. So let's see how it goes. But this is an offer for sale. The promoters will be selling about 120 crores and two private equity firms will be offloading about 120 crores as well. So that's Updater, the new kid in town. But let's get back to the market. It's not a great day to be listing as well because the market conditions are poor. The Nifty is down about 140 points and haven't seen any respite at all. Mitesh Thakkar is back with us. Mitesh, we've given up on this 19,400 mark with ease. What do you see as the move for the rest of the day?
Good morning again. A couple of observations. You know, one, both the indices had a gap down and there's no attempt to fill the gap, which means that till yesterday's lower being captured, good chance that we'll see supply kind of pressure remain at higher levels. And the Bank Nifty very likely should head towards 43,450 and Nifty towards 19,230, 40 zone, which is where we had bottomed out in August. So I think at least that test looks very likely to be in the next 2 to 3 sessions. So maintaining a mildly negative view. I have one buy and one sell call right now. M&M Finance is breaking down, so that's a sell. Keep a stop at 294. Look for targets of 270 here. While on the buying side is Ramco Cement, which I would recommend buying with a stop at 920 for targets of 980.
Okay, all right. There is pressure. It's not as if, I mean, after that initial bounce, things have stabilized or anything. 19,300, just on 19,400 is where we are at. Mitesh, thanks very much. We'll keep coming back to you for more. Well, we'll take a quick commercial break here. Up next, Manisha will join in and put the focus on what's happening in the commodities space. So lots of action there. We are back with that in just a bit.
Well, let's get a quick grip on what's happening in the world of commodities today. Manisha Gupta is joining in. Manisha, what's the one commodity that you're tracking?
Thank you, Sonia. I'm looking at aluminum prices. You know, overnight, metals have had a hit. We saw 2.5 to 3.5% of a decline across metals. So whether it was copper, zinc, aluminum fell 1.5% as well. Tin prices fell 3% and silver was down 3.5%. So metals have taken a hit and aluminum is no separate from the sector there. We have been trading at a 5-month highs for the aluminum prices, but with the overnight decline, we've started October on a weaker note. For the month of September, we did see the aluminum prices gain up by 5% in a market when most of the metals actually closed the month on a negative note here. Well, we have seen decline in other metals and that seems to be weighing on to aluminum as well. And then the hawkish Fed has lifted the US dollar index at a new 11-month highs. That seems to be weighing on across sector and asset classes also. For aluminum especially, it also is about China halting the expansion of production, and they have limited it to a current capacity of 45 million tons. So while last year China did produce an all-time high in sense of aluminum at around on the higher side at 40.2 million tons. That is what the markets are looking at, and we are looking at caps on production because of that. China actually seems to be importing cheaper aluminum from the markets there. The other point to note in case of aluminum is that Indonesia also has banned bauxite. Bauxite is a major ingredient in case of aluminum. So with China capping production, Indonesia banning bauxite exports is where aluminum clearly has been taking a lot of support from. If you look at the Shanghai inventories, well, we have seen those decline by 13% in the previous week. That was an added bullish point into the markets. And when you look at the aluminum production, that is actually very power intensive. So with the crude oil prices trading quite strongly in the positive, that seems to be supporting aluminum prices also. This is what we've done in sense of prices in this year until now. We started with a high of 2,660. We saw a decline up to 2,120 in the month of July. That was the time when most of the commodities actually saw a decline. Currently, we are trading at a 5-month highs of 2,300, but very down from where we started this year with. And the markets do believe that whatever highs that aluminum had to see perhaps have been done, the fourth quarter of this calendar year perhaps could be all about consolidation.
All right. Thanks a lot, Manisha, for that. All about consolidation. But let's do one thing. Let's take a quick break. On the other side, our special segment, It's the Economy. Lata will get chatting with Pranjal Bhandari of HSBC and Steve Englander of Standard Chartered Bank to discuss the surge in the US Treasury yields and its impact on emerging markets like India. Stay tuned.